The financial market of the United States stands as one of the most sophisticated and influential systems globally, reflecting the economic strength and innovative potential of the nation. Comprising various institutions, regulatory frameworks, and instruments, the U.S. financial market facilitates capital allocation, risk management, and the overall functioning of the economy. This video explores the components, significance, regulatory frameworks, challenges, and future outlook of the U.S. financial market. At the core of the U.S. financial market are its major components: the stock market, bond market, derivatives market, and foreign exchange market. The New York Stock Exchange, NYSE, and the Nasdaq lead the equity segment, providing platforms for companies to raise capital through the issuance of stock while allowing investors to trade these shares. The bond market, including government and corporate bonds, serves as a critical means for raising debt, providing investors with a fixed income stream. Additionally, the derivatives market encompasses financial instruments like options and futures, enabling participants to hedge against risks or speculate on price movements. Meanwhile, the foreign exchange market facilitates currency trading, reflecting the global interconnectedness of the U.S. economy. The significance of the U.S. financial market cannot be overstated. It plays a pivotal role in promoting economic growth by enabling efficient capital allocation, where funds are directed toward productive investments. As a vehicle for price discovery, the financial market helps gauge the health of the economy through stock prices and interest rates. Moreover, it serves as a barometer for consumer and business confidence, influencing spending and investment decisions. The robust nature of the U.S. financial market attracts both domestic and international investors, further solidifying the United States' status as a leading global financial hub. Regulatory frameworks are fundamental to the stability and integrity of the U.S. financial markets. Various entities such as the Securities and Exchange Commission (SEC) and the Federal Reserve oversee market activities, ensuring transparency and protecting investors. The Dodd-Frank Wall Street Reform and Consumer Protection Act, enacted in response to the 2008 financial crisis, aim to address systemic risks and enhance regulatory standards for financial institutions. While such measures enhance market confidence, critiques often point to the potential for over-regulation, which could stifle innovation and competitiveness within the financial sector. Despite its strengths, the U.S. financial market faces several challenges. Market volatility, exacerbated by geopolitical tensions and economic uncertainties, can disrupt investor confidence and create unpredictable fluctuations. Additionally, the rise of fintech and digital assets presents both opportunities and challenges, as traditional financial institutions grapple with the need to adapt to rapidly evolving technologies. Security concerns, including cyber threats and fraud, continue to pose risks that necessitate vigilant regulation and risk management practices. As the market evolves, addressing these challenges will be crucial for maintaining its robustness and reliability. Looking ahead, the future of the U.S. financial market is likely to be shaped by technological advancements, demographic changes, and global economic shifts. The integration of artificial intelligence and blockchain technology has the potential to streamline operations, enhance transparency, and reduce costs. Furthermore, as younger generations with different investment preferences enter the market, financial institutions may need to adapt their strategies to meet evolving demands. The increasing emphasis on sustainable investing is also likely to influence market dynamics, as socially responsible investment decisions gain traction among investors seeking to align financial returns with ethical considerations. At the center of the U.S. financial display is its structural institution, which includes miscellaneous segments in the way that the equity market, bill market, derivatives advertise, and foreign exchange market. The impartiality market, primarily depicted by stock exchanges like the New York Stock Exchange, NYSE, and the Nasdaq, admits companies to raise capital by issuing shares to financiers. The debt market, in another way, facilitates appropriating through instruments such as bonds, permissive governments, and corporations to finance their operations and projects. Moreover, the derivatives market includes a range of financial contracts whose value is came from underlying assets, providing methods for risk management. Together, these segments generate a robust platform for capital distribution and investment time. Apart from the structural components, the implements traded inside the U.S., financial advertises are instrumental in shaping financial interactions. Common economic instruments contain stocks, bonds, options, futures, and exchange-traded assets, ETFs. Stocks represent ownership in association and are subject to market vacillations based on supply and demand, while bonds are indebtedness securities that offer fixed interest fees over time. Options and futures as products allow financiers to speculate on price movements or hedge against potential misfortunes. ETFs, which track indexes or areas, have gained popularity for their liquidity and variety benefits. The diversity of these implements enables investors to tailor their folders to meet specific risk tolerance and asset objectives. Supervisory bodies play a pivotal act in maintaining the integrity and security of the U.S. Financial display. The Securities and Exchange Commission, SEC, is the basic regulatory authority supervising securities transactions, guaranteeing that investors are provided with correct information and that markets work fairly. Additionally, the combined reserve as the central bank influences monetary procedure and interest rates, thereby impacting appropriating costs and economic activity. The interaction between these regulatory organizations and market dynamics is important in preventing systemic risks and promoting investor confidence. Effective managing not only protects consumers but also advances a transparent and efficient advertised environment. Concerning details, advancements have profoundly revamped the landscape of the U.S. economic market. The rise of fintech companies concerning mathematics trading and blockchain technology has transformed how transactions are performed and how financial duties are delivered. Online business platforms have democratized access to the markets, admitting retail investors to participate more energetically. Moreover, blockchain technology has made acquainted new paradigms for asset holding and transaction verification, lifting questions about the future of traditional banking and monetary institutions. As technology persists to evolve, its associations for the financial market will be deep, necessitating ongoing familiarization and regulatory oversight. Finally, the financial market of the United States of America is an intricate system collected of various segments, means, and regulatory frameworks that together underpin economic venture. By understanding its structure, the variety of financial instruments, the important role of regulation, and the impact of mechanics advancements, stakeholders can better guide a long route, often over water, this dynamic environment. As the worldwide economy continues to develop, the U.S. financial display will undoubtedly remain a critical performer, influencing not only domestic business-related conditions but also worldwide financial trends. Through persistent innovation and effective rule, it can uphold its place as a foundation of economic stability. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you never miss a money tip. Drop a comment below with your thoughts or questions. I'd love to hear from you. Until next time, stay smart, stay savvy, and keep building your financial future.